Good morning, traders. It is Tuesday, November the 4th. Taking a look at the charts. I'm going to start off with crude oil here. We got the daily chart of crude oil, and we started to see this little bearish consolidation here, and now we saw it start to break down yesterday. And we ended up getting out yesterday just before the close. If you didn't get out yesterday before the close, you've got an awesome opportunity to get out at the open today with a big move even deeper in our favor. Overall, we're seeing crude oil move right down into this extreme long-term support zone. And if we just zoom back on the chart, go way back in time here, you can see we've got, if we can go back a little bit further even, you can see we've got this high volume level here, which happens to mirror with this pivot low, another pivot low. Of course, this low here came right down to the top of that level, and now we're getting right down deep into that zone. Now we're getting a very similar pattern to what we saw over here. You get the market getting oversold, you get a little bearish pattern, you get a blow off kind of little bottom here, an exhaustion kind of move to the downside, then you see a knee-jerk reaction back up. And that's very similar to what I think we've seen right here. The fact that we're coming down to this more or less year high volume support zone after such an extended move, I think we're going to get a significant move up in crude oil from this level. We can see here we've had a move down, a consolidation. We've had the second half of that move down. It looks like a pretty good measured move. This looks like a typical kind of bottoming formation. Now, if we just take a look at the inverse here, the SCO, what we're kind of looking for here, this is a pattern that is somewhat actually bearish. I almost call it my own kind of pattern. I call it a torch. You get a nice bull flag kind of forming. Instead of it flagging down, let me just draw on here real quick. Get a strong move to the upside. See it come down. It actually flags to the upside and then pops to the upside. And we're going to see a huge gap up here today. At this point, we could see SCO gap up 6% higher from yesterday's close, and this, I think we could easily see it sell down, a very bearish candle, and then work its way and eventually break down and see a big move down in SCO. So that's kind of what we're looking for. And if we actually look at the GDX ETF, you can see how this pattern played out once before. You get a very similar pattern. Big move up, you start to see price chop around. You see a big gap to the upside, and then it reverses, and you can see a significant move down within a couple days. Usually it's a much more bearish pattern. You can see it move down obviously a lot more. Again, you can see this type of pattern that happened over here again. You get this kind of consolidation here up near an overextended area. You get a big move, you get a gap to the upside, and then you see selling kick in. So that's kind of what we're looking for in crude oil. And of course, we can use the USO ETF. USO is going to gap way down here, and I think we could easily see it start to reverse and put in a significant bottom and a strong reversal today. So that we could be looking to get long at the open when we see a big gap. Of course, there's another way to play this, which is UCO, which is the leveraged crude oil fund. This will obviously gap to the downside, and we'll be looking for a reversal up for a multi-day bounce. Possibly, if we look at USO, my kind of USO target that I have here is actually around the 35 mark. So we could see, let me just get rid of this, we could see USO probably open somewhere down here around the 29, and then I think we could see it's got potential to move all the way back up to around the 35, which is you can see here we've got high volume resistance. It's the last consolidation, and this market has moved to a point where we're seeing extreme sentiment shift. Kind of we're seeing a real flush of the longs, and usually get a knee-jerk reaction to the upside. So that's kind of what we're looking for in the grand scheme of things. Obviously, we're going to have resistance at the 20-day moving average. Obviously, that's also a high volume support zone, the upper end of this range. It would be a spot we'd be looking to lock in gains fairly quickly, and then seeing if we can get a much larger move going forward several more days or weeks. Now, also taking a look at the US dollar index, this is the monthly chart. And obviously we've seen the dollar take off, and we've seen crude oil fall. Obviously it's hard on commodities. We've seen the same with gold and silver and mining stocks. But now you can see we're right here up into multi-month resistance, these previous peaks that obviously led to very sharp declines in the US dollar. And now that we're flirting up at that level, we saw these green bars pick up speed, and then we started to see a little bit of weakness, and now the candles are getting smaller and tighter. And of course, we are right into resistance. If we see the US dollar start to come down, we could easily see commodities start to have a bounce, which would be good for obviously getting long, likely crude oil. So that's kind of what we're looking at there. Now, jumping into the equities charts this morning, Nasdaq down 0.2%, nothing, or sorry, the SP 500. Obviously, we poked to new highs. The whole market here is overextended. I think we could. Everybody that I know of is more or less trying to pick a short here. I do feel as though we're going to get some short-term weakness. I think we could easily still hold up above this 5-day moving average. We could see this market grind higher and keep pushing higher eventually. I think we could see something very similar to this. We start to see chatter and then start to see a bit of a pullback and go from there. So I'm not sure we're going to get a sharp knee-jerk reaction to the downside. I think we could see this grind out. With everybody expecting the market to pull back here, it usually won't do it. It's going to just grind its way kind of sideways and higher and keep poking to nominal new highs until everybody's exhausted. Everybody keeps shorting, keeps giving up and getting stopped out. And then that's when you see the market give way and they usually miss out on the downside. So that's kind of what I'm feeling is going to unfold going forward. Taking a look at precious metals, gold trading down slightly this morning. Silver is actually down 1.4%. It's actually picking up speed to the downside. Gold miners this morning are relatively flat, but we could see them continue to have more weakness. I think they're going to be really attached to what the US dollar index does. If it starts to top out here, I think we'll start to see gold and miners start to firm up a bit. Obviously, we had a strong up day yesterday in miners. In the grand scheme of things, it's just a tiny little green bar inside this massive downtrend. We've seen more or less a 30% decline in the last week and a half. 5% bounce is nothing considering we saw 8% down days back to back last week. So really this little bounce is nothing significant, and I'm not getting too excited about it yet. Taking a look at bonds real quick, we're seeing money move into bonds this morning. Bonds are up 0.3%. Trying to build a little bit of a base here. We've had a little bit of a move down, consolidation, another move down. I do like bonds for in the grand scheme of things, but I do feel as though we could see this continue to drift down even more. I think we need to see some type of kind of washout low, very similar to what we saw over here. You see money moving into equities and money moving out of bonds, and then suddenly you see a big drop, and the masses more or less pile out of bonds and into equities, and usually that's when the market reverses. So that's kind of what we're looking for here. We're looking for people to really pull their money out of bonds and get long into equities again over the next week or so. And I think we can see bonds continue to pull back more. And then I think we'll see bonds take off as the equities market corrects. Looking at the real estate fund, REM. It's had a nice, we ended up getting long somewhere over here, and then of course we had this gap down. This was our dividend payout, so even though it gapped down, we actually got that money in our brokerage account, and now we're getting back here, so we're actually somewhat in the money here, and of course we're still letting this mature. It still looks good. A lot of times we'll see real estate hold up fairly well while the market starts to get tired, and the equities market starts to get tired. It seems to be kind of an alternative investment, and I think we could see this continue to grind its way higher going forward. And that's about it for this morning. So we may get long crude oil at the open using USO or the UCO fund. We'll see what the volatility looks like going forward the next hour and a half and kind of just go from there. Anyways, take care. Talk to you in a bit. Bye-bye.